This is our video Forex blog for December 9th, 2010. What you see here is our IntelliTrend currency meter, which shows you the real-time statistical trend strength and weakness of all the pairs. And underneath the histogram that shows the real-time strength or weakness, you have the weekly and monthly strength or weakness. And basically you want to find a super strong currency like the dollar here from 4 to 8. The weekly trend's extremely strong up, the monthly trend slightly up. And then you want to trade that currency against one of the weakest ones, which today was the euro. From 3 to about 11, the euro was the weakest one, and the weekly and monthly trend also confirmed that. So you want to sell the weak euro against the strong dollar. It's that simple. Here's the euro dollar, and if you look at 3 o'clock right here, you can see the market starts to fall. Our tools are pretty fast in alerting you to new trend directions, and you could have gotten short right here. First of all, it was going up yesterday, and our trend reversal triangle usually is the end of most moves, and you can see how often the trend reversal signals work. And so that was the first sign that the up move was over. And then when it was going sideways here, it really didn't have that much weakness, and there was more intensity of the down than the up. So there's a lot of signs that this wasn't going higher, and the weekly and monthly trend were likely to continue. You might have gone short right there, but if not, 40 minutes later you short right here. Weekly, pivot, and hourly are good profit targets. So if it stalled there, you would have wanted to get out. But once it broke underneath there, and especially did a retest at the hourly moving average, the gray line in the middle, your next profit target's way down here. And that currency trend was off the charts. At that point, the market's already fallen about 100 pips. You might have gone short on a little pullback here and here, and you can see the weakness is gone. One of the systems we teach is the Elliott two-wave pullback. You draw that on there, and most of the time you're looking to get short at the first or second fib target. So you might have got in here with a tiny loss, and then got back in at the 2.0 level, and that also led to almost an 80 or 100 pip drop down as well. You have another Elliott two-wave pullback later in the day, and these work best on super weak currencies. Notice it went right to the fib target plus our counter trend sell signal right there, and the market pulled back about 25 pips from there. Now, the Swiss also was very strong later today, so you could have traded the Euro Swiss from a 10 o'clock onward to the short side. And notice the drop off here. Another huge move. The Australian today was also quite strong, and so you could have also sold the Euro Australian. Weak Euro, strong Australian, and if you look at this, the market just collapsed. And if you missed the first move, you might have shorted this first little counter trend move here, and the market fell another 50 pips. Other than some of the strong and weak pairs today was a pretty dead day. We can go through and look at some of the other currencies here. The monthly trend is down, the weekly trend's up. You also have this fib level here that's likely to be support. Once that gets broken, it's very likely to go down, and when it went back up here and double topped with the strength disappearing, it's also underneath the hourly. That's a good trade as well. Dollar Swiss, earlier today the daily, weekly, and monthly trends down, so you might have looked to sell here at the hourly, but the market exploded through there. As it goes up and kind of forms a top up here, notice just a few pips away from my projected fib high of the day. Good place to look for sells because the weekly and monthly trend are for the most part down, and you might have gotten short there and made 30 pips as it pulled back to the weekly pivot level right here. Notice the NR7 breakout led to this huge move, which oftentimes is the case. This one is one that you probably wouldn't want to trade because the weekly trend's up, the monthly trend's pretty strong down. It didn't have that much momentum earlier in the day, a lot of narrow range patterns, and if it breaks out to the upside, you have this fib level up here is likely to stall price. And if you did take a trade or two and then you see the market's just really chopping around with no clear direction, no intensity, just look for other and better opportunities like the Euro Dollar, Euro Australian, and Euro CAD sells. Australian dollar, daily, weekly, monthly trends up. It went up statistically too much at the upper containment band, and you can clearly see a double top there with divergence. I'd be a little hesitant myself to sell there because you have the fib level of support, support there, support there. Usually the third time a support level gets hit, it usually breaks and it's a pretty decent counter trend trade with your hourly as your likely profit target. It fell about 40 pips. Because this trend is up and you see it double bottom right here at the hourly with a lot of weakness the first time and very little the next time, the weekly monthly trend's up. This is a pretty good buy. And I would have got out of the trade right here when it hit the fib. I wouldn't have expected it to go through there. It only went another 10 or 15 pips up. And after that part, I wouldn't have traded it anymore. New Zealand dollar, the trend's down, but when it's above the hourly, it's more likely to go up. So the only trade on this one I would have taken is this pullback right here to the hourly and the weekly pivot. Anytime you have two areas of support or resistance, it's usually a pretty good place to get into a trade, especially when all the time frames line up. Plus, the previous move down was very explosive, and the up move had nothing, no intensity at all. So it's a pretty decent trade. It only pulled back about 15 or 20 pips. You might have taken the same trade here or here, but pretty dead day today in this pair. The daily trend's up, the monthly trend's down. So, when that's the case, and neither of the trends is that strong, you don't have that much of a momentum move. You can see it came up to the 20-day moving average with no intensity and a failed breakout over yesterday's high. You might have gone short here where this is your likely profit target. Once it breaks underneath the hourly, there's nothing to stop it until the fib level down here, which you can see acted as support for about 5 hours. So that's a great trade right there, and that generated about 35 pips. Because of the intensity there, you might have gone short somewhere up in here, and you could have either got out with a break-even, small win, or small loss during that. I probably wouldn't have gone short right here, but just because the momentum to the downside didn't seem that much, and it appeared that the fib was holding, so I would have missed this next 40-pip move myself. Once it breaks underneath that level, it's a very big sign of weakness. You might look for some sells when it comes back up to the fib. Nice little 20-pip move there. That's a decent trade, which, depending on if I was trading or not, might take. Pound yen, the daily, weekly, monthly trend's up. However, most of the day today, it's underneath the hourly. So when it's underneath the hourly, you want to focus on sells. And you had a false breakout to the upside here today. You might have looked to buy the double bottom right here with our counter trend buy signals because there wasn't that much weakness and the longer term trend was up. That would have generated about 40 or 50 pips. Double tops right here with the second top having actual weakness. I call this a negative divergence trade. And once a currency makes a move and it returns to the hourly, usually it's a pretty decent place to get into a trade. I would have got out of the trade right here because the longer term trend's up. You're not going to usually make too much selling a currency that's pretty strong on the longer term. Sometimes it goes an extra 30 or 40 pips after you get out, but you can't beat yourself up over stuff like that. This one, the daily, weekly, monthly trend's up. I would have bought this breakout here, the narrow range pattern, because all the time frames support it. And unfortunately, part of trading is when trades don't work, you have a loss. So you would have lost 10 pips there. Pull back to the hourly right here, counter trend buy signal. You can see the daily, weekly, monthly trends up, and even though this was a moderate weak down move, it wasn't that weak. It wasn't at the dotted 20 line. So you got into that trade here and you got out at the hourly when it stalled. Notice you can't get above the hourly here, and the momentum even goes down even further. So once it breaks underneath the hourly here, you might go short with this as your profit target for a quick little 20 or 30 pip move. Again, keep in mind the weekly, monthly trend are super strong, so don't be greedy. Draw your fibs on the first wave down and look to get out at the first or second fib target down here, which did stall price, as you can see. New Zealand yen, this is a horrible trading currency for many reasons. One, you have the 50-day moving average, which is a major area of buying. You have the hourly moving average and the 10-day moving average right above it. And you also have a fib level here, which usually is going to have some buying or selling depending if price comes up or down to it. So it's very likely to be a chop zone until it really broke out of this range, and you can see no real momentum. You might have gone short right here, but the next profit target's just underneath it. So this is what I refer to with as don't take a trade that's not likely to give you 1.5 to 2 times more than your risk. In this case, the next support buy area was only about 10 pips underneath that. You risk 10 pips. You never want to risk 10 pips to make 10 pips. So for the most part, this experienced traders would have avoided this one like the plague. Dollar yen, this is one that I rarely trade because it usually doesn't move that much. And a lot of days when the dollar's strong, the yen's strong too, and vice versa. The daily, weekly, and monthly trend is up, but unfortunately it's underneath the hourly. So it's always riskier buying a currency underneath the hourly and selling a currency above the hourly, and there's no real momentum. Most of the days I avoid this currency like the plague myself, unless I see some huge signs of strength or weakness in it. Last but not least, the CAD yen, and this is exactly like the New Zealand yen. We have the previous month's high above us, this fib level here, and it's very likely to chop around between these two major areas of buying and selling. And there's no extreme levels of strength or weakness. Our currency meter would never have had you even look at this currency, because most times when you see this, one currency may be strong while the other one's strong. You never want to buy two strong pairs or sell two weak ones. It just leads to choppy sideways action like this, which our software can help you avoid completely and improve your trading.